you hate the thought of working past 55 or 60? Do you hate not being able to live the life you deserve today? Do you hate not knowing what your financial future looks like? It's time to stop doing what you hate. Here's your host, Mr. Harold Green.
Aloha, everybody. This is Harold Green of Bright Tree Wealth Management. And it is time to stop doing what you hate. I hope you folks are having a fantastic day. I'm doing pretty good. Took a couple of weeks off here from actively having appointments and just working on reevaluating things, thinking about our future and what it is that we need to do better for the people that are on the Bright Tree Wealth Management bus. I'm very grateful for all the people that have given me an opportunity to work with them, because again, to earn someone's trust is really a tough thing to do. And we're facing a lot of different things, and we simply just have to figure out the best strategy to overcome any particular challenges that we face. And I'm going to go back and talk a little bit about the 97.3. And it is our mission to help as many people as we possibly can get from the 97% of those who, when they retire, they won't have enough to live on to last them their entire lives, into the 3%, which is, those who have enough to last them their entire lives when they retire. And, I've done a lot of research and I've experienced a lot of things over the last month or two. Some of it is extremely disheartening. Some of it is extremely exciting. And so I want to kind of go into the exciting stuff and not so much the negative stuff. But today's show is about tariffs and inflation. And I'm sure you've probably heard a lot about it. But my question to you is how much of what you've heard is actually true? Is it the truth, or is it a narrative that's being pushed for political purposes? And as a thinking person, I want to submit to you that it's a mixture of both, and we'll get into it in a second. So are you ready? 1, 2, 3, let's get it. So we're going to be talking about tariffs and inflation. And so this whole narrative kind of got to me a little bit, and the inflation narrative got to me. And when things start to get to me, I go into what I call research mode. First, I get upset. Then I want to know why. So I go into research and I try to consume as much information as I possibly can. And so to me, the narrative around tariffs and inflation and stuff like that, it's super mixed. Some say tariffs are going to be inflationary. Some say they will not. And that's because I believe that inflation is currently higher than it normally is. And there are some factors that are keeping it there. And I'll get into those in a second. But first of all, you got to understand tariffs and how they really work. And it's like me saying a knife. And I can spin this one or two ways. I can say, man, knives are great. Or I can say, man, knives are horrible because knives kill people. I mean, really? If you've ever used a knife, you understand that knives are very beneficial and they can be dangerous if put into the hands of the wrong person. And I think tariffs are the same way. This is my personal opinion. I think they can be extremely helpful, and I think they can be extremely dangerous when put in the hands of the wrong person. But let's look at how tariffs work, and then you can kind of make your own assumptions after you hear the things that I have to say and do your own research. All you hear right now is tariffs are inflationary. My first question as a thinking person is why? Why are they inflationary? And so you can go do your own research on tariffs. They're imposed at customs. They're paid by importers. Now, when you hear people saying that's just going to raise costs for everybody else. Now, the question is we'll get into a little scenario here in a second. But is that true? Will a corporation that has a tariff situation, will they pay the whole thing? Or are they going to pass part of that cost down to the consumer? It's up to them. And I'll get into that in a second. But depending on the importers, a lot of times the cost is passed down to the consumer. Now, how can the consumer protect themselves? Well, either they can eat the cost or they can go buy something different if they don't want to pay the extra cost. And I'm going to get into something that's probably going to shock you here in a second. And you're going to see like how horrible of an issue that they're making this thing out to be. And, the higher tariffs make foreign goods more expensive. And so they want you to buy domestic. And so the whole thing with Canada was like, hey, Canada, buy Canadian stuff, don't buy US stuff. And they have the right to do that. But what if the foreign stuff is better, right? What if the phone that they make in the foreign country is way better than any phone you can get in your own country? What if the car coming from the foreign country is way better than anything you can get? Are you willing to pay that extra cost on that car? Or you're saying, hey, that thing costs too much, another $1,000, I might as well buy US. What if that's not what you really want? You have to kind of think about this. Okay. And I want to get into a little bit of an Apple scenario and how that works if you have an Apple phone. And let's just say the Apple phone is like $999 and they put a 25% tariff on phones coming from China. So Apple can, pass on the whole cost, and they can pass on some of the cost. So if Apple passes on the full cost of that $999 phone, excluding taxes, it comes out to $1,248. All right. It's a little bit of a jump, but from $999 to $1,248, like, what is that? 200 something, 250, $300. Like, if you can afford $999, is an extra $300 going to break the bank? Some say, well, the phone shouldn't cost that much because of these stupid tariffs anyway. So that's another argument. You got to understand what the tariffs are being placed there for. And I won't get into that. But let's just say that Apple absorbs half the cost. And so then it's, what is it, $125? And so now it's $1,125. Can Apple absorb all of the cost? They can, but they may not want to, because if they absorb all the cost, it's going to eat into their profits. And if it eats into their profits and that shows up in the earnings report, then yeah, tariffs are bad for Apple. And if your primary holding is Apple, what does that do to you? Well, it hurts you in the short term. I'm sure Apple will recover. They'll find a way to make more money. And this is just if Apple goes down because their earnings went down and they couldn't find a way to make up the cost of the tariffs, right? Then it's bad. But if they can absorb everything and it doesn't affect the stock price, then what's driving, everything else around that to me would be fear. And I normally don't like to make decisions or trade, based on fear and things like that. Now, the next thing you got to understand is, how does inflation work? But let me just go back and submit a question to you, like, that's even before this, right? How did we even get here? Tariffs, inflation, like how did we even get here? So first we started with inflation, and how does inflation work? Well, inflation is basically there's too much demand with not enough supply. That's when supply it's limited, demand is driven higher for a lot of different reasons, exacerbated. So one of the things is government stimulus or increased public spending. That's one thing. We had COVID, if you folks remember what that was a while back. And during COVID, we had a lot of policy that was made without really thinking about the impact of where we are today. So 2020, we're in 2025, 5 years. These decisions are coming back to haunt us in a major, major way. Also, what we had increased cost for raw materials, energy, oil price spikes. Why? I mean, we know why. The last administration had an adverse mindset towards energy. They wanted to get rid of fossil fuels. That caused prices to spike because of their energy policy. We had supply chain disruptions. People weren't working. People were out of work because things were shut down. So things couldn't get through. Monetary policy and excess money supply. It talks about when central banks increase the money supply too much, it can devalue our currency. And, it basically, we had a dollar that was weak. Interest rates were too low for too long. Feds were talking about inflation is transitory, so we don't really need to be raising these rates because inflation was transitory. Inflation was embedded a long time ago. They just, for whatever reason, to me, I think they're biased. That's all that was. Like, you got 200-300 PhDs working for you, and they couldn't figure out inflation was not transitory. They thought it would be, but you got to know more than we know. Okay, we're just average people trying to do our job every day. Central banks were printing way too much money, more than the economy could handle. We talked about the supply chain shortages and things like that, business expectation, depreciation of currency, and on and on and on and on and on. And, it got me wondering. And so last Saturday, I was sitting down at my desk, like I was supposed to have been off that day, but I was like, oh, this is really bothering me. So let me just kind of dig into it and figure out what's really going on here so that I can share a little bit with my clients and my listeners in terms of what I think what I think we ought to be doing. And when I dug into the numbers, here's what got to me. The biggest factor of sticky inflation are a couple of different things. Number one, transportation services. When I look at my chart here, transportation services, like car insurance, car insurance has gone through the roof. Why? More claims. Why? More crime, more accidents. And then I began to think about this a little bit as a thinking person. Why are there more accidents? There's a lot more distracted drivers. There's a lot more people on the road than are normally on the road because of the stay at home crowd. And I'm not saying it's wrong to work from home. That's not what I'm saying here. There's tremendous benefits of that. However, when too many people are supposed to be working from home and they don't have the moral aptitude to be working when they're supposed to be working, but they're like going out for lunch and going out to shop and they're doing all these things, running errands. There's more and more people on the road. And if they're distracted trying to answer work emails on the road and answer texts while they're driving, get to the boss when they're supposed to be sitting at their desk, but they're driving and they don't want to get caught. Like, it's a lot of stupid stuff going on, right? And we really have to look at these policies that are being made and how it's affecting everything that are around us, right? Energy prices are still a little bit elevated. They're coming down some, but here's the thing. Energy producers are not going to just fall in line with this drill, baby, drill thing. They're just not going to. And some may be able to absorb some of the prices of dropping the cost of production, but some cannot. So they're going to be a little bit reluctant to do that, I believe, from what I've seen and heard. And then there's surveys that are done by households, and they're thinking that inflation is going to be back up to 4.3% in another year. So, like, who are these people being surveyed? And it's just data, that information they just put out there. Some of these surveys, I think they should just trash and get rid of. Because, if they're talking about inflation is going to be higher because of car insurance, here's what I think, right? There's no way the feds can keep rates high and it bring down inflation, especially in the area of car insurance. Yeah, everything else might come down, but if transportation services just keep skyrocketing, it's going to make inflation continue to look sticky. I'm no economist. I just look at charts and data that other economists put together. So I don't have to be an economist to look at charts and to read charts to tell me what they're all saying. And I can put a couple of different charts together and get a couple of different pictures. And from there, I have to decide how to trade for my clients and what we ought to be doing. So when I look at that chart, that interactive chart that I put together, and I click on a couple of different things, it shows me that insurance, it would go down, it would spike, it would go down, it would spike, it would go down, it would spike. Now it's just spiking and it's not going back down again. And that's a lot. Food costs, they go up and down, up and down, up and down, but the trend is going down. Energy costs, I'm looking at a chart, it goes up and down, but it stays relatively, from 2023 until now, it's just kind of been trending. It's been trending down. If we look at other things like motor vehicles and parts, that chart looks like insurance. It goes up, down, up, down, up, down, up, down, and it's still elevated. So transportation services, I want to pick up another beverage and food purchases. Same thing, up, down, up, down, up, down, relatively trending down, which is cool. And I mean, when we look at it, to me, it's just like all the stuff is just narratives that people are trying to push. And so we have a couple of different things that are facing us here. We still have the sticky inflation and we have tariffs. How do we trade our portfolios around that? The question right now is, what theme are we investing in? And to me, I think our theme is going to stick with technology. Why? Because technology seems to be one of the areas least affected by tariffs. Inflation, I believe the same thing. Cost of technology will go up incrementally, but not to the point where you would see something affected by tariffs go up. And the other thing too, again, is when you look at the overall cost of things, tariffs don't affect all items. There's a lot of items that we get in the United States. And if these companies can come to agreements, then we really don't need to worry about that. So when we're seeing the market being crushed to hell by narratives that haven't even materialized yet, that's what really gets me. And I say, okay, take a deep breath and go and check something out. So right now, what I want to do is I'm going to go check out the CNN Fear and Greed Index. And guess where it is again? It's over in fear. So the cost of tariffs haven't even materialized yet. inflation from tariffs have not even materialized yet. Will they? I'm not sure. And if they do, how much of an impact is it going to have on things that we buy every day? We're living in a bifurcated economy, the haves and the have-nots. And the have-nots will have a hard time, and then they will just have to simply adjust their spending. The haves, they don't care. They're going to buy what they want when they want it anyway. So for us, we're not going to go and change up our portfolio out of fear. We're going to stick with our theme of technology. We're going to stick with our theme of AI. And we're going to continue to investigate companies that I feel are going to drive profits in the next 5-10 years from the AI theme. And the companies that can get there the fastest, generate the fastest results in terms of profit, that's where we want to be. And this is how I look at these types of opportunities to drive my clients towards the 3% and far, far away from the 97%. So if you're out there listening to me and you've been caught up in these types of narratives and you want answers, I believe that we have a solution for you. So here's how to get a hold of us. You can go to the website and request an appointment, or you can give us a call, 808-521-4401. And what we'll do is we'll hear you out, hear out your situation, and then see if you are a great candidate to go from the 97% to the 3%. And some of you may already be in the 3%, or you might be in the 10%. What is it that we can do to help you in your situation? Well, we can protect you from crazy narratives like this and then show you how to continue to invest through these types of things. And a lot of times you don't have to take your foot off the throttle. Okay, you can still drive through these things. Now, you may have to get in a different car, which is a different sector at a different time, but you never stop driving. And if you're listening to me, I definitely want to have a conversation with you. If you're already a client, thank you very much. Please share the show with your friends and family that are suffering through these types of crazy narratives. And until next time, everybody, 1, 2, 3, let's get it.
This is thepodcastfactory.com.